When we think about what's going on with markets right now, Tom, investors are really trading on feelings and not facts. This is a sentiment driven market, whether it's sell everything US, whether that's stocks, bonds, dollars. But when you look underneath the hood at the facts, earnings growth, most importantly to us. In the US, we just saw Q1 earnings come in at 14%, 9% is what analysts are penciling in for the year. You look over at Europe, earnings growth this quarter was negative 8%, and analysts are revising down earnings estimates to around 3% in Europe. You look at the macro backdrop in the United States, growth is holding in. The city economic surprise index is actually perking up. The hard data is coming in positive. We're seeing the opposite happen in Europe as their data is coming in weaker, growth is struggling overseas, yet you've seen this massive capital rotation out of the US into Europe. We would fade it and use those proceeds to invest in the United
That's
States.
so opposite so many
Yeah,
others. I love it.
Sebastian Page
She
Yeah.
here
actually
today.
thinks she actually thinks the Red Sox are going to win 10 in a row in August.
Emily,
Oh,
I
yeah.
got to ask you, and I just said it before, 2 to 3 cuts are priced in before the end of the year by the Fed, and the Fed's made no secret about its
Yeah.
asymmetric view on policy rates and inflation. Is there a possibility that the Fed can move more aggressively before the end of this year?
Well, probably not, especially given some of the fiscal developments that we've seen. I think one reason that the bond market is repriced for fewer rate cuts this year is because now we may have this fiscal thrust coming through as a result of this big, beautiful bill that's potentially coming through Washington. So the more fiscal stimulus you need to do, or that you plan to do, the less monetary policy stimulus that you need to do. So we're seeing a big shift on that front, and I think that
Right.
probably pushes out the Fed to later in the year.
On the big, beautiful bill, Margaret Brennan of CBS still scheduled to be with us at the top of the 9 o'clock hour. Craig Moffett on Apple will be with us. He's been cautious. Mike Green will join us from Simplify Asset Management as well. Damian, please, to Emily Roland.
Emily, U.S. GDP growth expectations have fallen off a cliff. I mean, looking just at Q4 year over year, I mean, my goodness, I mean, it just fell off a cliff here. And so I'm just curious to hear your thoughts about the dollar. I mean, what are your thoughts on the dollar here? I mean, what are you guys seeing on a forward basis? I mean, is the end of the dollar's hegemony at risk here?
No, we don't believe in the death of the US dollar. That narrative does tend to resurface every few years. The dollar is still the world's reserve currency. We've seen this really notable dynamic where yields have backed up at the same time that the dollar's weakened. That
Right.
almost never happens. And I think it is a result of the sentiment around sell everything
Yeah.
America. With the US, I'm not saying we're great, but we're sort of the cleanest shirt in the dirty laundry from an
Love
economic
it.
growth perspective here. That should actually bring a flood of dollars onto our shores. Other central banks are cutting. The US is on hold for now. All of those traditional dynamics that we look at suggest that the
Right.
dollar should not be experiencing weakness.
And that line, that optimism, is like what you would hear from Bill Gross, the founder of PIMCO. He used to love to talk about the cleanest shirt. And the other thing I would say, Emily, to your Boston College is when P. Lynch at Fidelity years ago said you have to stay the course. Explain to people petrified or bewildered or confused how to not panic and take the 401k to cash.
It's so important. Peter Lynch lives right down the street from me here. And another great investor, of course, Warren Buffett, said recently, just don't bet against America. When you think about the incredible innovation that these companies in the United States have, we have a massive overweight to high quality companies. A lot of those are found in the US technology space. And when we think about what really drives markets over time, I think one of the most important things to remember is stock prices follow profits. We are investing in companies, not countries. And we want to think about where can you find that earnings growth engine? And as we look across the world, we're still finding it in the US. Yes, sentiment can be a powerful force over time. Momentum can be a powerful force over short periods of time. We do not use momentum and sentiment in our investment process. We use cycle analysis, we use fundamental analysis. And right now, we want to gravitate to those high quality companies. Most of them are found in the United States.